Good morning, everyone. Elaine Lowe and Ken Shreve here live at Investors Business Daily in Los Angeles. Today we're taking a look at Tilray, Altria, and Nike. But first, let's check in on those indexes. We have the Dow trading 0.6% lower, the S&P 500 about 0.33% lower, and the Nasdaq down 0.1%. What's hitting the markets today?
Well, it's sort of a continuation of selling that we saw yesterday. You know, major stock indexes on Wednesday were rallying ahead of the Fed statement at 2 p.m. Eastern, and I think the market was kind of hoping for, you know, a really dovish Fed, and you know, they did lower their rate hike outlook for 2019 down to 2 rate hikes from 3. But I think the market was maybe hoping for a little more, because remember, financial markets weren't really expecting any rate hikes at all in 2019. So it was a very bearish session for the market Wednesday, and we are off lows but still extending losses a little bit today. And oil down sharply again. The drop in oil prices down 9% so far this week. The drop in oil prices has been a sight to behold.
Well, as the market digests that, let's take a look at a few individual names. We have Tilray, the cannabis producer. That stock up sharply following a research deal with AB InBev, the alcohol producer. And that deal comes on the heels of a few other major beverage deals. We've seen Constellation Brands' huge, nearly $4 billion investment in Canopy Growth, along with a lot of these other guys who are producing or looking into produce cannabis drinks. Yeah, and Tilray just on Monday, there was a big headline. Stock rallied sharply on Monday because they have this marijuana distribution agreement with Novartis for medical marijuana. So stock was up nicely on Monday. It fell sharply Tuesday, and so the stock is up again today. So a big deal with InBev regarding research of cannabis drinks. So, you know, we've been talking about marijuana stocks lately. I think fundamentals are still a little bit, you know, cloudy among some of the big players in the group, like a Tilray, Kronos Group, Canopy Growth. And what about the technicals on Tilray? It's pretty new. It doesn't have that long of a history. Sort of below its very short 50-day moving average. Yeah, I mean, it's a damaged stock technically, so we'll see if institutional investors are going to start propping this one up. But it has corrected sharply off its highs. But again, this marijuana market, you know, a $9.5 billion market in 2017, expected to mushroom to like $32 billion in 2022 thereabouts. So growth prospects are very bright. The challenge is to kind of find the best ones in the sector, and Tilray making a pretty good guess that it could be it, but still kind of a technically damaged stock here. Right, and our cannabis beat reporter Bill Peters is all over that one, so make sure you're following his coverage at investors.com. And another bit of news today that Bill also covered, Altria Group, the tobacco heavyweight, taking a 35% stake in vaping company Juul for around $12.8 billion. Confirming a Wall Street Journal story from yesterday and valuing Juul around $38 billion. Yeah, and so the stock is, Altria Group is actually down today, not so much because of the Juul investment, but they did give some earnings guidance for 2019 that was a little bit light. So at last check, shares were down about 3%. Again, a stock that has really been hit hard by institutional selling in recent weeks. We're seeing so many stocks far off their 52-week highs here. It's probably going to take a little while for the technical damage done to individual stocks in the broad market to repair itself. So Altria, you know, really not in a buy area here. You know, Altria just made an investment not that long ago in Kronos Group, 1.8 billion. You know, so they're getting into the marijuana market as well. Who isn't these days? Yeah. Okay, and lastly, let's take a look at someone who's not investing in the cannabis group. That would be Nike, pivoting to retail, or announcing earnings after the close. We are expecting earnings to dip about 2% by a penny to 45 cents a share, with sales looking to be up 7% to $9.16 billion. Again, as always, look for those North American sales figures. Those have turned around over the last 2 quarters into positive territory. We also want to see their their e-commerce numbers, and their speed to market initiatives. Those are the main things that people are going to be looking at as the world's #1 athletic apparel retailer reports.
Yeah, and the thing with Nike, obviously the trade war uncertainty with China. I think I read some data recently that some 11 billion, 12 billion of footwear is imported into the U.S. From China, and certainly a big part of that is Nike. So the stock has been very weak lately, has come in far off its high. Again, this is a stock chart that looks like many others in the market right now, basically following the broad market lower. But I mean, truth is, there are fundamental questions about Nike and what the final result of this trade war with China is going to look like. But there's a lot of Nike does a lot of business in China, makes a lot of shoes in China, so you can see why the stock has been so weak. So we'll see if we can get a dead cat bounce on earnings if it's better than expected.
Right. So definitely also look for commentary from management on China and its other international markets. Although the analysts I've spoken to so far about Nike have still been moderately bullish on it. So, we'll have to see. It is the biggest name out there in athletic apparel retail. So, all right. Okay. So for more on those names and more, make sure you're reading investors.com. Don't forget to subscribe to our YouTube channel and follow us across all of our social platforms. That's Facebook, Twitter, YouTube, and Instagram. And in a couple of weeks, you and Alyssa will have an AMA coming up on YouTube where you can ask me, or rather them, anything. All right, thanks so much for watching, everyone. We'll catch you tomorrow.